Hello and welcome to Beyond the Brand, the podcast where we go beyond the services and the products offered by First Mutual, and we go deeper into the stories and the innovation shaping Zimbabwe's financial future. My name is Pauline Dendere and I'll be your host today. Today, we are tackling a topic that hits home for every Zimbabwean: the pensions and retirement planning. For decades, many hardworking citizens contributed diligently towards their retirement, only to find that those savings were wiped out by hyperinflation, policy shifts, and currency change. The result, a lot of distrust, disappointment, and uncertainty. But things are changing. Today, we are unpacking how Zimbabwe's pension sector has evolved and what lessons have been learned, and how First Mutual Life is introducing innovative, asset-based solutions designed for today's economic realities. Joining me today is the First Mutual Life General Manager, Mr. Wilefaston Chibai. Welcome, Mr. Chibai, to Beyond the Brand.
Thank you, Pauline. And it's good to be joining you on this podcast.
That's great. We want to understand the pension landscape, and we want to start with some context: the Zimbabwe pension story and the history that has been very, very complex.
So when you look at the Zimbabwean pension story over the past 20 years, it is a space that has been facing economic turbulence, and we have seen some structural shifts. From a structural shift point of view, you'll notice that most of the pension funds that you're actually finding in Zimbabwe, 95%, are what we call your defined contribution schemes. We saw a transition from what we used to call defined benefit schemes, which were really based on the years of service and your salary at the end of the day. But that shift, what it has brought about, it brought about market volatility on the part of the members. It also brought about accountability in terms of investments to the members themselves, which was a responsibility that I think a lot of our members were not prepared for. Apart from that, we also faced hyperinflation crisis, that is in 2009, 2008, getting to 2009. And that compounded by the currency reforms that we encountered or were promulgated in 2019 had a negative impact in terms of pension savings. The industry then had to respond to some of those changes by introducing asset-backed solutions. We also saw prescribed assets being given to housing investments, being given to livestock investments. And apart from that, we also saw the regulator coming in with reforms that would allow pension funds to actually invest offshore. So it's been a cocktail of issues, the negative and the positives that have also come through. But at the end of it all, it has been a resilient sector, given the challenges that it faced over the past 2 decades.
So as of today, what does the pension environment look like in Zimbabwe?
As of today, when you look at the pensions environment in Zimbabwe, there is the issue of loss of value. There's the issue of trust between members and the system. Okay. And that is a big contributing factor that has actually affected even contribution to the pension system. Apart from that, we're also seeing environment wherein the contribution levels are low compared to the retirement outcomes that actually members want. For example, the average contribution levels are probably around USD $47 per month. So that in a way says that we are still a long way from actually investing towards the retirement that we want. Besides the issue of low contribution rates, we're also seeing that the asset levels are still very low. Number one, after the hyperinflation episode, properties and some equities were probably the assets that survived. And then you move and come to 2019, you've got a currency reform again, there was an impact in terms of the overall value. So the overall pension values are low. And we are also grappling with the issues of liquidity stemming from the fact that most of the returns that are actually filtering through are as a result of revaluation gains. When I'm talking about revaluation gains, this is like the gains that you're finding within the property sector, the gains that you're finding maybe from the repricing of shares that is on the Zimbabwe Stock Exchange, and also what's happening on the Victoria Falls Exchange. So it is a volatile environment that you're seeing. It is also characterized by area contributions that are growing, which talks to the hard times that the employers are also facing. And besides the issue of the contributions that are actually on the lower side, the other positive factor is really the aspect that we have seen, again, a shift into alternative investments. When I talk about alternatives as opposed to the traditional investments where people predominantly in the past were used to investing in your stock market, in your traditional property, now you're seeing the emergence of your rates. You're seeing alternatives into infrastructure, into even power, that is solar. So we are seeing a shift in industry, which is what I can say is probably a cautiously optimistic industry as we're moving forward. But we're still having to do with the past challenges that we've had as an industry.
Interesting. Given this background, what opportunities exist to build the confidence of the contributing members?
I think the opportunities that are there in terms of trying to make people want to still believe in pensions really starts around bridging the trust gap. So members, what they are looking for security. They are looking for something that's tangible. They're looking for real value, right? And they're looking for communication or transparency so that they understand what's actually happening in the background so that they can trust the system again. So what it says from the industry perspective, we need, number one, to be able to offer tangible solutions, products that bring meaningful value to our members. We need to be able to adopt digital or leverage on digital. So digital transformation is a key aspect in this industry. We need to have inclusive products. When we're talking about inclusive products, we do have a growing informal sector that we have in Zimbabwe. So our products needs to be able to be inclusive and be able to respond to the dynamics in the environment. We also need to have a strengthened regulatory aspect from the regulator side, such that they come in and be able to support the industry, such that it's able to grow. And last but not least, we need to be able to encourage people to embrace savings, to bring back that savings culture. So the solutions have to be able to make sure that they encourage people to want to save again.
Let's dive into the people's lived experiences. From your engagements and client feedback, what are some of the biggest fears that the clients have concerning pensions?
I think at the top of it all is the issue around trust.
Trust.
So the question that a lot are asking is, will my money be there at the point of retirement?
Yes.
Besides my money being there, will it have a real value?
Yes.
Can I be able to trust the system again? So those are the fears that members have. So members are looking for security.
Yes.
They're looking for transparency.
Yes.
They're looking for value preservation. And they're looking for a tangible benefit at the end of the day.
At the end of the day. You did mention something about the informal sector, which makes up a large part of Zimbabwe's economy. How does this group fit into the pension conversation?
So when you look at the informal sector, it's a significant contributor to the Zimbabwean economy. You're looking from a GDP perspective, you're probably looking at 70 to 74% contribution. If you're looking at the employment statistics, they're hovering at about 86% in the informal sector. So it is quite a large contributor to the economy. And the informal sector, unfortunately, has been excluded from the pension sector by virtue of the traditional pension setup, where you're looking at your normal DCs, which are looking at formal employment, and the rules are really talking to formal employment. So what we need to do is to be able to craft solutions that talk to the informal sector. So those solutions have to be flexible. They have to be talking to the kind of income that you find in the irregular income that you find in the informal sector. It also has to talk to their perceived view of value. So their perceived view of value is probably different from the traditional pension setup that you have. And also, we need to ride on the micro pensions regulation that was put in place by the regulator to try and support the informal sector. So if we then tap into those and work along those lines, I think as an industry, we should then be able to come with a befitting offering for the informal sector, which also then pushes the financial inclusion agenda, which is from the government perspective, from the Reserve Bank perspective, from the NDS1 perspective, and even when you look at the strategy of the government, is for us to push for financial inclusion. So the informal sector is really a key sector that we need to actually tap into and bring relevant solutions.
Thank you for that response, Mr. Chibaya. You mentioned something about micro pensions. Can you break down for our listeners what that is?
Micro pensions is really pensions that are, number one, are flexible, are portable enough, and allow one to be able to contribute at the level that they are able to contribute.
Okay.
So you don't want to be setting as a minimum, which then pushes a lot more members out of the contribution. But you want people to be able to contribute what they can afford and as and when they can be able to make that contribution, and then grow that money into something that will give them a meaningful benefit. So essentially, it's something that's on a low scale, low level, that has got easy entry, that's affordable, that's flexible.
Having been in the pension industry for so long, what are the key improvements that are necessary to ensure that the pension industry operates more effectively and meets the evolving needs of our contributors?
I think the biggest issue that's there for our pension funds to be meaningful is number one, you have to deal with the problem that resulted in the loss of value.
Okay.
So the problem that resulted in the loss of value is really stemming from macroeconomic stability. So what it says is that for pensions to thrive, or savings of any nature to thrive, you need to have a stable environment. So from economic policy, you want to be having consistent policies. You want to be having policies that will push economic stability. Then the other aspect that you need to do is to look at the level of contributions that are there.
Okay.
And then have meaningful contributions that would then result in a meaningful value at the end of the day for the member. Then is to also bring about innovation in terms of the products. And I think asset-backed solutions are the best way to go.
Okay.
And also having to diversify country risk by also investing some of our contributions offshore, such that we give them a diversification and also a base that will also help solve the current volatility challenge that we've always had. But I think the biggest issue that we need to do with, number one, is a relevant solution, which is asset-backed to our members that don't respond to the whims of the economic turbulence. And then number two, a stable economic environment such that the pension system or the saving system can actually thrive in Zimbabwe.
Against this background of the Zimbabwean pension industry and the experiences that our listeners and our members have had, We understand that First Mutual Life has introduced the Imba Yangu Indlu Yami product. What inspired this idea?
Really, what inspired this idea, it is from our clients.
Okay.
Our clients were seeking a solution, having faced a loss of value, having seen their savings being wiped away. And having seen that, our clients wanted something that would give them real value.
Okay.
And our view was to also give our clients a real legacy, something that they can leave behind, something that they can live off in their retirement, or somewhere where they can go and stay in their retirement. So our thrust was to be able to bring to the fore a tangible product. Besides that, our thrust was also to try and reignite the savings culture. And we're to look to say, what are the key issues that people are willing to invest in? And for us, issues around housing, given the housing backlog in Zimbabwe, was a no-brainer. It was one of those things that our pensioners are really interested in. And also, when you look at the traditional forms of wealth, when you look at land, you look at livestock, these were the traditional form of wealth that people could live off. That's why our forefathers were able to enjoy their retirement, because it was backed on those assets that were there for years, and they could still derive value off those. So based on that, that's what then brought the idea. But the biggest driver was really the need of our client that made us come up with this product.
So what you're saying, what I'm understanding, is that the Imba Yangu Indlu Yami product actually responds to the fears and reinforces the trust that people have in pensions.
Because yes, absolutely it does. Because instead of you saving for the unknown,
okay,
we're saying you're building something real. So it's something there that's tangible, despite the changes, be it in the policies,
okay,
be it in currency. Land will still be there.
Okay.
So it will still derive value, and it's a proxy for the US dollar. So for us, it was an answer. So anything that's asset backed and is tangible, be it livestock, right, be it gold, for us, it will still be there, and it will still deliver value to our members.
Okay. So what I'm understanding is that at the end of the day, the client is assured of something that is tangible.
That is the key aspect. Instead of having a monetary benefit that can change in value and color,
okay,
depending on the economic policies or depending on the environment, what you want is something that's certain that no matter what happens, this asset is still going to be there for me, and I can derive value in whatever form, but the asset is still there. So the key issue is an asset-backed solution, which is real value. So it's better to have hope, which is supported by something real,
okay,
than saving into the unknown.
Okay.
Yeah.
I'm sure our listeners are intrigued and are interested in knowing more about the Imba Yangu Indlu Yami product. Who is eligible to sign up for it?
When you're looking at the Imba Yangu Indlu Yami, we made it accessible. Anyone from the age of 18 to 65 is able to actually access the Imba Yangu product. We've also made it affordable. We have also made it flexible in terms of the paying terms. So it's essentially an insurance savings product where you are contributing towards your sum assured, which will be exchanged for a piece of land which fits that value that you are saving towards. So at the end of the day, what you're buying as you're making your monthly contributions is really buying a stake into a piece of land, right? And once you are done and you've made it to your maturity value, what it then says is that you're then getting your piece of land in exchange of the maturity value that's actually going to come out of that savings pot.
Okay. We previously discussed about the informal sector. how can, if they are interested in this Imba Yangu Indlu Yami product, how can they sign up for this product?
So for the informal sector, this product is actually meant for everyone.
It's meant for everyone.
The formal and the informal sector.
Okay.
You've got terms, 5, 10, 15-year terms. You can choose the one that suits your pocket. We've got premiums starting from as low as $70 that one is able to pay on a monthly basis. If you want to make a deposit, you can make a deposit just to make sure that you can then shorten the time period within which you are then going to be able to take on board your property. So for the informal sector, we do have our agent force that are out there that will be able to go and talk to the groupings of the informal sector that are able to move around people's stores. We do also have containers that we have in Magaba, that we have in Chungwiza, that is at Huriadzo. We've got something in Zishavane, we've got something in Beitbridge. Okay. And besides that, we are also found out in the major centers. So where there are a number of people that are actually visiting those centers. So our teams are available to actually engage with anyone who's actually interested in this. Besides this, people can also get hold of us on our social handles so that they can inquire about us. And we also do have a contact center that's also in place to be able to actually talk with our prospective clients and be able to give you information around this particular product. So be it on WhatsApp, you want to know information, be it over the phone, toll free, be it having a physical contact, we are available to be able to engage more on that particular product.
Thank you so much, Mr. Shbaya. How do you see this innovation changing how Zimbabweans view and think about about retirement and pensions?
What it does is it to help us bring about trust or close the gap between the service providers and our members, right? What we also feel is that this is an innovation that talks to the fears of our members. It brings about the issue of security that members are clamoring for. It brings about a tangible product. So it goes back to the point that I raised earlier, that instead of you saving for the unknown, you are building something real, something tangible that you can see. So what it says is that we have to invest in our destiny. Okay. We can't let our past problems define the future. Okay. And for us, the future is investing and embracing the Imba Yangu product, or an asset-backed solution that we've brought as First Mutual Life.
For the listeners and our clients who are skeptical based on past experiences, what is your parting shot?
So for our clients that are skeptical, please come to us. Let's discuss. This particular product has got something tangible supporting it. If you want us to be able to show you the piece of land that is actually supporting this particular product, it's actually there. So what we have done is to go ahead and start purchasing the land supporting this particular product. So this is not a pie in the sky that we're talking about. This is something which is real, which is there, which is going to be available no matter what happens. Once you are allocated, you know where your stand is. Okay. And it means that you are going to actually benefit from it into the future. So what we've done is also taken away the mistrust in the past by dealing with unscrupulous land barons. Okay. We're a trusted brand. We've been in this space for years. Okay. And we put our word where our delivery is. So come to us, and we assure you that we are going to be able to deliver, because the asset backing this product is actually there.
Thank you so much, Mr. Chibaya, for your insights and helping us see how the pension environment and the pension landscape is evolving in Zimbabwe. Thank you so much for joining us in today's podcast of Beyond the Brand. And to our listeners, if you're interested in the Imbayangu Indlu Yami product, you can visit our website, www.firstmutual.co.zw, or you can come and see us at any of our branches and we'll be able to assist you. And to all our listeners, thank you so much for joining us in today's episode of Beyond the Brand. Remember, like Mr. Chibaya said, the future isn't just something that you wait for, it is something that you build. Until next time, do not forget to follow us on our social media handles so that you do not miss the next episode of Beyond the Brand. Take care.